Hello, thank you for joining us for another week of the Market Carver. Adam is out this week on a much well-deserved vacation, and so filling in his shoes is Zach once again. I believe Zach filled in for me while I was out, so I'm happy that Zach's able to come back in and talk to us again. But what's going on in the market? We got three main points that we're going to hit this week. We're going to look at the participation level in the market. We're going to look at the breadth, how many stocks are participating, going higher, how many are going lower. We're going to check in on the labor market. We just got the latest data for September. And then Zach's going to talk to us about small cap, specifically the valuation, potential attractiveness in the small cap space. So first, let's talk about market breadth. This is a topic that we often talk about in our weekly allocation meeting, and we often bring it up in the market carver as well, because it's really, really important. Every day that the market trades, it really is a market of individual stocks. And so we want to know what those individual stocks are doing. Are they going higher? Are they going lower? Because when the majority of them are doing one trend, that's going to be a big influence on where the overall market goes. So the first chart we're going to look at specifically looks at the number of stocks that are making new 6-month highs and 6-month lows. We can see in that middle portion, the green bars there, are the number of 6-month highs. As we've gone throughout this year, we're seeing less and less of those 6-month highs, unfortunately. Instead, we started seeing more and more 6-month lows. And then we finally had that low in June. The market saw a really strong bounce in August till about mid-September. And then we started seeing less and less 6-month highs once again. We started seeing less participation on the upside. And now today we're back below those June lows for the S&P 500. And where do we have breadth data? Breadth is once again not looking great. We're starting to see more 6-month lows increase, and actually that black line is the 15-day average of the daily lows, and it's actually showing more lows than actually back in June, which is telling us that we are seeing an expansion in selling, not the environment we really want to be in to start pressing our bets, so to speak, trying to get more risk exposure within the portfolio. And so this is one of the tools that we use to evaluate the market and to know when to start increasing or decreasing our exposure to equities, specifically U.S. large cap equities. So now shifting focus, looking from the market data, going to some more of the economic data, we're going to look at the labor market. So every month we get new data from the government that gives us a glimpse into how the labor market's doing. And this is really, really important, specifically for two reasons. One, it influences how the economy itself is growing, but it also influences what the Federal Reserve is going to do. Right now, as we've talked a lot about on the market carver, the Fed has been raising interest rates. The Fed is tasked with managing a healthy labor market and also tasked with managing inflation. And so they've been raising interest rates, trying to combat the high level inflation that we're having right now, while at the same time they want to keep a close eye on the labor market and realize as they raise interest rates, that can begin to stifle economic growth and stifle the labor market growth that we're seeing. But right now, we're not seeing that quite yet. So when looking at the data out of September, we had 153 million payrolls, a very, very strong number there. We can look at the next chart, actually looks at the unemployment rate. And that has been continuing to trend lower. Unemployment rate fell from 3.7 to 3.5% within the U.S. Very, very low labor market, very low unemployment rate. Suggesting that we are seeing a very strong labor market. So this can be a good news and this can be bad news. Good news is great. We have a lot of people that are employed, a lot of people that are able to make an income that they can then buy things, stimulate the economy, and we continue to see the economic growth as capitalism takes hold. The downside is when we see a really strong labor market, the Fed becomes a little bit more emboldened that they can continue to be aggressive in raising interest rates. So we'll get the next look at inflation data later this week. It comes out actually the day you'll see this video on Thursday, and we'll get another look to see how consumer prices, if they're rising or falling as far as the inflation data goes there. And that will be the big influencer for what the Fed does next. One leader for kind of leading indicator for the labor market that we use is actually looking at job openings. And that'll be our next chart. When we start seeing a rising number of job openings, it means a lot of employers are looking, they're posting jobs, they're trying to hire more people, suggesting that we can continue to see that's a positive for the labor market, for the jobs market. What we're seeing now is we're starting to see a little bit of turn lower. We actually saw a drop, as you can see on the far right side of this chart, a decline in the number of job openings, meaning there's a slightly less number of employers that are posting jobs trying to hire more people. And so that typically will lead the labor market. As we see less job openings, we start seeing unemployment rate can tick higher. And so it's something for us to monitor, that maybe we are starting to see a little bit of stress within the labor market, even though it is very, very strong right now. But over the coming months, we'll be watching those trends to see if they do change, or if we continue to have a really strong labor market, which hopefully we do, because it is long-term positive for the economy. Now I'm going to turn things over to Zach. He's going to give us a look at small caps.
Yeah, so we're going to take a look at two small cap charts in terms of valuations. Both of these charts are using forward price to earnings ratios. So the first one we're looking at here is the relative price to earning ratios for small caps versus large caps. And you can see there that we are down near the early 2000s levels, meaning that relative to large caps, small caps are actually very undervalued. Then you can see the long-term average line there, well below the long-term average. And then the second chart here is an absolute an absolute chart showing just small caps on their own. And you can see that their valuation relative to where they've been in the past is down near 2009 levels and well below that long-term average line. So what that means for us, just from a general sense, low valuations tend to be followed by long-term strong performance. And specifically in the small cap space, as markets start to recover, historically what we see is that small caps do well. They perform relatively well compared to the broader market. And so two little pieces of information here showing us that small caps, as we see a market start to rebound in the future, small caps will be a space that our team is continuing to keep our eye on.
Very good. Thank you, Zach. He's exactly right. We are seeing some potential long-term attractiveness to that small cap space, as small cap companies really have seen their valuations taken to historic lows. So we are, for a large chunk of our portfolios, long-term focused, and small caps are a place that we are going to start looking for opportunity there, as valuations, as Zach shared with us, are very, very low. So that's the three topics we have for this week. If you would like to set up in a meeting with one of our advisors, schedule a time to come talk with us, scan that QR code right there, or give us a call at 800-928-4001, and we'd be happy to get you on the schedule and meeting with your advisor or one of the advisors on our team. Thank you so much for tuning in. We look forward to, again, presenting with you and talking with you next week in next Thursday's Market Carver. Have a good weekend.